this is what exciting about the current DeFi space is there is a lot of things that can be done and will be done. And if we build a solid product with solid basis, we will be able to be a part of it and to help make the DeFi go further.
Hey everyone, welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic from 4RC. Today's show features Dopex V2, a decentralized options exchange built on Arbitrum to provide permissionless and non-custodial access to options trading. Since the 2022 collapse of DeFi liquidity, the team went back to the drawing board to create an anti-fragile product suite with consolidated, not fragmented liquidity, superior LP returns, composability, portfolio margin, easy-to-purchase options, anytime exercise, and multi-leg strategies. In this episode, we'll interview a Dopex advisor and investor about the culmination of their work resulting in two main products, one being a concentrated liquidity AMM and an options AMM. But before we do, just a quick word from our sponsors who make the Edge Podcast possible. For most of us, our crypto journey started with MetaMask. And now with MetaMask Portfolio, we can do so much more. MetaMask Portfolio puts you in control. Use the dashboard to see all your assets and balances across your wallets in one place. The buy feature allows us to buy crypto assets effortlessly with fiat options such as PayPal or credit card. The swap feature allows us to swap any tokens anytime by finding a selection of available rates. The bridge feature allows us to bridge between networks including Ethereum, L1s, and L2s based on the best price and fastest delivery time. And with the stake feature, anyone in a few clicks can stake ETH and earn rewards. Do more in Web3 your way with a safe, simple, and convenient tool that's all in one place. Track and manage your Web3 everything at metamask.io/portfolio. Whether you're a trader, farmer, analyst, or newbie, you can trade smart with KYBERSWAP, the OG decentralized exchange and aggregator on 13 chains. Swap at the best rates, farm with real yields, set limit orders, use their proprietary trading and AI tools with the best UX in DeFi, securely and permissionlessly. Get better rates, better opportunities, better alpha, and a better trading experience. Trade smart now at KYBERSWAP.com. Mike, before we get back to the show, can you explain what is liquid restaking?
Everybody at this point is familiar with liquid staking. It lets you take your staked ETH, mint a liquid staking token, and then use that token in DeFi. Well, the hottest thing in staking right now is restaking. It's the ability to reuse your staked ETH to provide Ethereum's trust layer to other services that want to benefit from it. Services like data availability layers, Oracle networks, other blockchains, and beyond. The benefit of restaking is that you get to earn additional staking rewards on top of your normal staking rewards. Well, currently, if you want to restake your ETH, your only option is to lock up your ETH. The reason that's a problem is because you can't use your restaked ETH in DeFi. We are launching ETH, the ETHER.FI liquid restaking token, because with liquid restaking, users get the benefit of staking rewards, restaking rewards, and they get to collect loyalty points for ETHER.FI and EigenLayer through this token. So it's the easiest way to get exposure to two up-and-coming early protocols, and on top of that, get all the benefits of staking and restaking.
To learn more about ETH liquid staking and liquid restaking, go to ETHER.FI.
It all started so simply with CryptoKitties and Maker on Ethereum, but quickly became complex with more applications and many chains. Today, everyone agrees UX issues are the biggest blocker standing in the way of crypto adoption. Introducing AVOCADO. Multi-chain UX redesigned from the ground up. The first wallet to abstract networks, accounts, and gas. One gas tank to pay transaction fees on all chains. In USDC. And native access to INSTADAPP's powerful, custom DeFi strategies. AVOCADO, one wallet to rule all chains.
All right, so let's introduce Bosslmp, who is an anonymous advisor to Dopex. Boss worked previously in TradFi on risk management, interest rate derivatives, FX investment banking, and on options in a fintech. He has been a CFA charter holder, a DeFi trader, an investor, and an advisor now for 3 years. So, Boss, welcome to the Edge Podcast. How are you doing?
I'm great. Thanks for having me. It's a pleasure to be here.
I think it's fair to say that Dopex was a darling of DeFi near the end of the last bull run, and that sort of carried us into the bear market. It was one of the more innovative products. I think there was a general consensus that what Dopex was bringing to market was a new primitive in the options sector. And so that was exciting, but we've all lived through a pretty brutal crypto bear market. It seems like now we're coming out of that and we're seeing new interest in the markets. And so as we start to grow as a DeFi sector again, you start to imagine all of these primitives, whether they're new or redesigned, coming together to create like a richer, more mature DeFi space. And so Dopex V2 seems to be a promising component to this story. And so hopefully today we can kind of break down, really what do you need to know to discern, should I be using Dopex V2? And if I should, how can I benefit from using it as a DeFi investor? But Boss, why don't we kick off with a little bit more about your background? You are an anonymous contributor advisor, but anything else you'd be willing to share about what got you into crypto, and then maybe more so why you've dedicated yourself to working on Dopex?
Yeah, sure. So my story with crypto actually beginning with a rug, an ERA rug. So in 2013, I bought my first half Bitcoin, and it was a coworker who introduced me to it. We became good friends just when I started working in investment banking. So I followed a bit the crypto. I bought the first top in 2013, and then I held for a few months. And this coworker actually asked me for my BTC because he was running algo trading and he needed some more funds. So I pretty much trusted him. I gave him the BTC, and we for a few months. Then he quit the job, and we stayed in contact, etc. And once I wanted to get my BTC back, I asked for him. He said, sure, I'm running my algo a couple of weeks and you would get it. And then he vanished. He went abroad. I never heard of him again. So that was my first drug in 2013. Then I came back to crypto in end of 2020, to DeFi, actually. I came back to when Cake was launched. I did some LPing. I started very small because at the time after COVID, I was trading a lot of options on equities, and I was also interested by cryptos. But I didn't do the whole ICO, but the DeFi really attracted me, so I started by LPing. With my background, I wanted to understand a little more. We ended up actually writing a paper about impermanent loss in my fintech. So we had this software that for options was optimizing gamma hedging, it was optimizing risk management, for example. And we looked at an application because we have some of the LPs, etc. They have gamma too, and we were looking at application of this software. So we actually studied, modeled the impermanent loss, and applicated the software in a cool paper. And that sparked my interest. I ended up going more degen, going into the blockchain, seeing the project, getting in that technical and financial level, applying risk management, identifying the good opportunities. Crypto as a whole and the project works a lot like an economy, so you can apply some economic economic basis for investment also in some projects like inflation, etc. So yeah, I had a lot of fun with crypto, and I fell in love with it. I quit my job, went full-time crypto. I did advisor I wasn't an advisor for some protocols. Sometimes it was just people came ask me for opinion and I give it, that's all. And sometimes it was more deep, like Dopex. I ended up contributing for a few months in John's DAO. I was an option strategist there. We were deploying around 10 to 15 million TVL in early 2022 for a few months. And then I joined Dopex. I was an investor in Dopex in the public sale in June 2021. I've been using the product from the start. I've known the team, and it made sense to join them with my option expertise and to help them build those products, etc. So I have a long history with Dopex, even if I've been working for a few months there, but I know the whole history, and I had friends who worked there. That's actually how I was close with the team and know them, and I ended up joining them.
I am fascinated by the profile or like makeup of investors like you who were early to Bitcoin and experienced some sort of a, let's call it a rug pull here, where you interacted with someone else, you were looking to use like some sort of like a service that catered to what was really the only true digital asset at that time, Bitcoin. And so like, firsthand just why the permissionless and trustless nature of DeFi is so important, like being able to basically just trust a protocol versus having to trust individuals. But yeah, that's a story I think we've all heard actually more than once, which is sad to say that your buddy disappeared internationally. So I'm wondering, you've never been able to track this guy down?
No, honestly, like then Bitcoin went to, I bought it at around 1K and then it went to 300, or I bought 0.5 BTC, so around 500. It went to 300 or 200, and remember it was $100, like it didn't matter to go and say somewhere around the world, etc. Just buy it back, and it was simpler than go. But I did, like for a few weeks, I will continue to see him, and I was like, yeah, hey, I have some problem, etc. And then he completely, like, he moved on, and I never heard of him again. And I kind of trusted him because he's the one who introduced me to Bitcoin, and we entered at the job at the same time, so we're hanging out the net, having lunches every day, etc. So I really didn't expect that, but it's okay. Like I made it up all back.
Maybe if your friend or your old friend is listening to this podcast, they'll have a change of heart and track you down there, boss. Hopefully.
Vitalik, just return the Bitcoin to boss. My God, like you've got enough, sir. Please just return the Bitcoin.
Boss, I want to get into just kind of the option space in general before we dive into Dopex more properly here. I think like myself and everybody in crypto have been calling for options to really take off, and kind of like how the derivative space in TradFi is just massive, and people have been projecting that on like that activity on chain for quite a while. We've seen perps really start to have product market fit, but I think there's some evidence that options are starting to catch on. But I would kind of love your take on maybe just like what's been inhibiting some of that traction that we all think is coming eventually.
Yeah. So I think it comes from 2 points mainly. So the first point, when you compare it against perps, perps are pretty simple to understand and to grasp, to start to use, and even like to master in a way because of their linear payoff. How it works, it's straightforward. It's related directly to the spot. People can take as much leverage easily, and it's really simple to understand. Options are more complicated. You have a maturity, you have a strike. It depends on the volatility. You tend to mismanage risk and to lose everything pretty fast, etc. So there is this difference in complexity where perps can be really used by newcomers very, very easily. They understand that they use it. Options is a bit more complicated. When they start reading about it, they don't grasp it really well. You use a lot of like options. The complication is it's not theory, it's practice too. Like I've studied options in school. Then I in the CFA too, and then it really took me some time trading to understand really how it works, the different parameters, etc. So first step is the complexity. Second step is the Onchain. In my opinion, had major flaws, which is the capital efficiency. Like as market makers. Mix weren't interested in on-chain because you needed to sell one call. For example, you needed 1 ETH. So the return on investment is very low compared to the risk you need. So we didn't have, since like everything was made bulletproof, we needed the full collateralization. We needed to mature on that whole building of options on-chain. And that's why I think when the bear market came, options kind of died on chain because less liquidity, less like that capital efficiency aspect. All the activity was on a centralized exchange. Derivatives having 90% of the volume, even if it's lowering a bit now. CME for the future options, and Bybit, which is catching up a bit. And I think DeFi option on-chain summer is coming because we could be really competitors to a centralized exchange if we implement that capital efficiency, if we leverage on security. And there is an aspect that for me is really incredible on centralized exchange right now is the fees. We pay, the fees are so high that DeFi can come and can like smash those fees and get a lot of volume if they implement the capital efficiency, the portfolio margin, and the security aspect, and they're ready to scale.
Well said. I remember as Dopex and other options protocols were launching, there was an early recognition, despite all the excitement about Dopex V1, that capital efficiency had not scaled, and that it was just going to be an uphill battle with the likes of Deribit and other centralized exchanges. But that said, I'm really excited about the opportunity you called out with the ability to smash those fees that are so prevalent on centralized exchanges. Maybe then, Boss, this is a good time for us to start to talk about Dopex V1. I'm thinking that it would be helpful for you to give some like high-level context for like what was working well in Dopex V1 and then what wasn't working well and prompted you all to go back to the drawing board for Dopex V2.
All right, so depends on the time period. Like I said early on, we had our SSOV, so single staking options vault. So the SSOV were pretty simple in design. So how it works, you come, you deposit an asset, you will get some incentive, and people will come, like for an epoch was 1 week or 1 month, people come, they will buy options against your asset, and they will pay you premium. Those options had to expire at maturity. You could not sell them earlier. And that's all. So for selling one option, you needed to be full collateral. So if you're selling a put, you needed to have all the money, cash secured. If you're selling a call, you needed to have the asset to deposit the asset. That worked well for some time when there was liquidity. But as soon as liquidity dried up, we have seen every CVL getting crushed. Options buyer eventually were moved to the centralized exchange. We had other products, so we kept building. We had products with no liquidation using options. That worked pretty well. We had straddles to bet on volatility, so it doesn't matter where the price will go. If it moves a lot from current price, we'll make money. That had a certain success. Earlier this year, we had scalps that were designed for short-term high leverage with minimal cost, with no funding. So that launched in, I believe, in around April or March, April. And then when the liquidity started to drying up again, and we had also zero day, which was kind of spread. So you could, like you buy an option and you sell an option. I won't get too much into detail, but yeah, 0 day spread that will 24 hours way to get also a lot of leverage if you bet on liquidity, either to the upside or to the downside. Like those last projects didn't work well, I think, because the liquidity wasn't capital efficient, so you need full liquidity. So the LPer had to take too much risk, and from the buying side, we had less volume on chain, and I think it was fragmented. You see, we had so many products, straddles, 0 day, scalps, but with its own liquidity, and overall, like the usage fluctuated. I think if we were to merge all those products and have one liquidity that will be used much more for the tree, it would have been better.
Yeah, thanks for that recap. I think we should go ahead and get into V2 now. Just the other day, the Dopex team released a paper called Dopex V2, a new era in on-chain options. And there's a lot of stuff to break down in that paper, but I think we should kind of walk through each component. So the three main pieces, I guess, of V2 that will be introduced pretty soon are CLAMM, options AMM, and then a revised version of rDPX V2. So maybe, Boss, could you kind of dive into those one by one? Let's start out with the CLAMM. Maybe break that down to our listeners.
Yeah, sure. It'd be my pleasure. So I think before starting into CLAMM, we should do some kind of like revisit a bit Uniswap V3 really quick to get a feel of how CLAMM is built, why CLAMM is built, and why it's a good product. Let's just talk about Uniswap V3 really quick. So when you deposit Uniswap in a range, let's say 1.9K, 1.7K, so where is one? 1.8K, 1.8K, 2K. Now let's keep it more tight. So 1.9K, so around here, to 1.8K around here. So here you deposit in a range. You will divide your range into a bunch of ticks, as you see in the screen. So the tick is usually $2. Yeah, around $2 width. So you will deposit in a. It will be divided in a bunch of ticks. So how those ticks work, it depends on the current price. So here you see the current price is here, 1865. So above it, to the left, you would have only ETH in the ticks. Below it, you would have only USDC in the ticks. So if the price were to move to, like, let's say here, so to $20 to the upside, all the ticks between here and here will be converted from ETH to USDC. So what does it mean? Buyers came in the market, they took the ETH from you and they gave you USDC. So your whole ticks have been converted from ETH to USDC. If we go to the downside now, if the price moves $20 to 1845, what does it mean? It means people gave you ETH and got the USDC. So now on your ticks, the current price is 1845. Now on your ticks from 1865 to 1845, have all ETH in them. So here, like I said, for example, we deposit in, this one is 1900 tick. So if we come and deposit ETH in this tick, 1900, the price is 1865. If the price moves above 1900, we'll be selling ETH at 1.9K. And that ETH that we deposit 1 ETH at 1.9K will be converted to USDC. Okay? So now this is how the Uniswap liquidity works. Now let's get back to option. So option, what is a call option? The call option is the right to buy an asset at a certain price at a certain date. So for example, a call on ETH at 1.9K will give me the right to buy ETH at 1.9K. Let's say it expires tomorrow. Will give me the right tomorrow to buy ETH at 1.9K. Even if ETH is at 3K, I can buy it at 1.9K. If ETH is at 2K, I buy it at 1.9K. And I sell it right away. So I buy it at 1.9K, I sell it at 2K, I make $100. So let's get back really quick to this. If I deposit liquidity at the 1.9K tick and ETH goes to 2K, it's like I sold ETH at 1.9K right now, and it's at 2K. So if what we do in Dopex is we're gonna take this tick, this liquidity that is deposited at 1.9K, we're gonna remove it from Uniswap, and we're gonna say it's like an option. Why is it like an option? Because if the current price goes to 2K, for example, we had 1 ETH, because we removed it. So the 1 ETH was not converted to USDC when the price went above 1.9K. We had the 1 ETH. So if someone bought from us a call option, it goes to 2K, he can exercise it. We will give him $100 above the 1.9K mark. We will give back 1.9K to the option seller. So the option seller, it's like he deposited in Uni V3. The option buyer is like he bought an option. So we replicate exactly with the tick, we replicate exactly the payoff of the call option. It's 100% replication. The payoff is the same. There is no risk to manage. We make the option seller. So the UniV3 LP, we make him happy because we got him premium, and the option buyer got his payoff, his P&L, and everyone is happy. So this is for one tick. But what is really great about CLAMM is here, let's say the price is at 1865. The price will stay in a certain range here for a few ticks around the current price. If I have a big range of liquidity like 1900, 1700, I'm going to be only using 6 ticks or 5 ticks or 7 ticks during the day, or even a little bit more if there is volatility. But I have plenty of ticks that will get no fees from Uniswap. They will be inactive, and the magic of CLAMM is we'll be able to use those ticks to sell options against it. So we'll be selling, if utilization is high, we will optimize the yield of UniV3. If utilization is low, we will give, if there is no option buyer, you will still have your LPs in UniV3 getting the fees. If it's used, you will get premium, the option premium. And so if utilization is high, on average, you will have more premium for more ticks than you will than like the active ticks during the day that your regular UniV3 will get fees from. So we optimize the liquidity in the CLAMM by selling options against your whole range, and you won't get only the fees from the active range during the day. You will get premium for all the ticks that are used for options, plus any tick that is not sold as an option, you would get the regular UniV3 fee.
Yeah, that is super interesting. So if I were to kind of replay some of that back to you, I guess from like a user perspective, and kind of like if I'm a UniV3 LP, I'm looking at this as like utilizing CLAMM, the lowest I could get is my UniV3 LP position, but even if I guess it utilizes liquidity even like outside the range. So essentially your floor is your UniV3 LP position, but what CLAMM allows is even greater yields because the CLAMM is using that liquidity as well on the option side. Does that make sense, or how would you explain that kind of from like the user perspective?
Yeah, so from the user perspective, like the floor is not necessarily the UniV3 fees, because the UniV3 fees depends on the volume. So if we look really quick here, you can see here, this is like, I think for, if you see lately, here in November and in October, this is like, I can't zoom, but this is from 19th of October, or like, let's say from September, you can see here that the volume is pretty low. You would have some spikes in volume for some days where you have a lot of volume, but it will go down really quick. So on average, by using CLAMM, you would have more premium than UniV3 fees. But if you have a day with a lot of volume, though obviously that can happen, you may have more fees from UniV3 because you have way more volume. But on average, since we have more ticks that will be used to sell options than the active ticks getting UniV3 fees, and the premium usually matches the fees or is sometimes higher than the fees, depends on the volume. Again, we are looking at sometimes getting twice the amount of fees as premium for a range, or sometimes even 3 or 4 times more. Sometimes it will be a little less, but on average we'll make consistently more premium from fees. So if you are an LP that is looking long-term and is not looking at 1 day, it's looking at 10 days, at 20 days, at 30 days, on average, you will make more money LPing with us because you will have higher utilization for out-of-range liquidity. You would have more ticks that are active thanks to premium, as you would sometimes make even more per active tick than the fee you will get from UniV3.
So if you're a UniV3 LP, this is awesome for you. I'm curious if you're having any conversations with, I guess, some of the bigger UniV3 LPs. Like, Are you seeing excitement? Like, have any of them tried the testnet? Anything you can kind of share on that front? Because I think if I'm a big Uni V3 LP, I'm pretty excited about this.
Yeah, so the MPP, no one really used it because we were the one providing liquidity and people were able to only buy options, because at that point we didn't finish like the security review, etc. for people for being comfortable to people depositing liquidity. We don't want to risk any liquidity. But we have, for example, a partnership with Orange Finance, which is a delta neutral vault built on top of Uni V3. We are in talks with market makers to use to deposit into CLAMM. They like the concept a lot, and we will reach out to more and more. We are in discussion too, but I can't give a name right now. But we will on talks with those Uni V3 projects that build want on top of Uni V3 to build on top of us. And this is or like we can use any type of concentrated liquidity. It doesn't have to be necessarily Uni V3. It can be Camelot V3. It can be Sushi V3. It can be later Cake V3, etc. So any concentrated liquidity, we've made some adjustments for the more complex decks. But any concentrated liquidity, we will be able to integrate into CLAMM later on. And I think this product is really great for people that use Uni V3 for all the protocols, and they are seeing the value. Every time I have a discussion with an Uni V3 background or some market makers or etc., they're really excited about the project. They see the value, and it has great market fit because it optimizes the current payoff. Your benchmark is Uni V3. It's not necessarily stables or assets that you sell against options like in AMM, etc. This is tailored for optimizing Uni V3 and getting the most of it while keeping the same behavior exactly.
Who do you envision to be the ideal users for this? Like, if you are a Uniswap V3 LP, then you probably would be interested in X. Anyways, can you call out some of the characteristics or some of the qualifying traits of those that might be most interested in using the CLAMM?
Yeah, for me, there is two groups. There is the active NPers that have strategies built with Uni V3 and they manage it outside, for example, the delta neutral with an edge on Aave or etc. Those type of projects that aim to give passive yield to people, superior passive yield to people. So those big projects. And I think, which can be interesting, since we optimize Uni V3, you have all those active strategies that are built on top of Uni V3. For example, I've been running for a while a strategy where I will deposit in Uni V3 and I will buy options to handle my risk and my impermanent loss, long-term options with lower theta, etc. And I will arb the difference of volatility between options and volume. So this is an example of strategy that all the active players that we are using Uni V3 in a way, or in some way, can be interested into LPing and even buying options from Dopex. So depositing in certain range, buying options in certain range, or even buying options on different platforms, on different maturities, etc. So there is, for me, two types: the passive and the active will be interested by this, and anyone that just want to deposit in Uni V3.
So, Boss, with the CLAMM, what is the timeline for that? And I guess I'm curious how you intend to kind of incentivize early users. Like, how do you draw in that liquidity to a net new product like this?
That's a really good question. So thanks to Arbitrum, we got around 1.5 million from STIP. We'll be using around 400K for CLAMM, to incentivize CLAMM. For 3 assets, we'll be incentivizing ETH USDC, ARB USDC, and BTC USDC. So people that will deposit their LP in EV3 with us, they will get the fees from the swap fees. They will get the premium from selling the option when their LP is done, and they will get on top incentives. So it will be a very high APR for 3 months. We expect really great APR. It could reach, it depends on the TVL, of course, but it could be up to 40, 50, or even higher on some assets, just for depositing in EV3 LPs. I think that's a great way to bootstrap the market, to get some users, to get people to LP, and to see even without the incentives, they're getting a lot of return from the premium, from the fees, and they will like learn to use the product, and we will attract also the option buyers that will see and that will use the product. Since there is liquidity and a lot of people depositing, it's gonna like, they're gonna talk about it. And personally, I will buy options on CLAMM because I think the volatility will be very good. I think it's good to bet on the volatility is back in the market. You can see ETH, you can see BTC, you can see ARB. It's moving a lot daily, so you can make profit buying those options, so like the short-dated options, and we'll have deep liquidity. So those big players that want to buy 1,000 options, 2,000 options, they will have the liquidity to do so, and they will have the ability to exercise their options, and they will have the ability to deposit for a good APR. So I think we will attract a lot of people with this bootstrap phase, and hopefully later, like we will have numbers to show APR for the premium, for the fees, how much you can earn, and with that we'll convince more and more people and to come and to have the sticky liquidity in Arbitrum.
Boss, are there any shortcomings that you would call out to this new design, or are there any like drawbacks to the way that the CLAMM is designed?
I think like the major drawback for me for CLAMM is how it's designed. It's a pool-based mechanic, so people we will pool all people's deposit, and if they get used 100%, people may not withdraw their liquidity until the option is settled. This is the case for the next few months, but we are already working on a solution where we will target a certain utilization. So for example, what was mentioned, if all the options are bought, people can't withdraw the liquidity because the liquidity is needed to settle and to pay the option buyers. But in the future, we can, after the CIP, for the CIP it's not a problem. People are paid so much with the ARB incentive, so with the premium, that they will accept to be locked because the APR would be super high. In the future, what we will do is we will target a certain utilization. Like it, for example, it's done with AVE. When you have a 100% utilization, your interest rate will skyrocket. So it will not be interesting for people to use all the liquidity or to borrow. We will attract some liquidity to deposit. So here what we'll potentially do is we will find a way to cap utilization or to make the premium go really high, so the utilization can never go to 100%, and people will be always able to withdraw. And if they withdraw, we will have incentives and we'll have premium that will be giving to other people and to make them incentivized to deposit liquidity. So all those aspects, we are aware of some shortcomings on how we design CLAMM, etc., but those are worked on. And our goal with CLAMM is to have to iterate on it and to make it really the best product it could be. So this is kind of the V1 of the V2, but we would iterate on it and we will make informed decisions with the data-backed decisions, and make it even better than it is right now. But as a product right now, even with the shortfall, it stays a great product, and that is interesting for people that are aligned with UniV3 long term.
Can you remind us what expiry dates would we have available with these future options through the CLAMM, and then anything to predict, I guess, which assets will be supported? I can imagine, of course, ETH will, but curious if there's any other tokens or crypto assets that are going to be launched with the CLAMM to start?
Okay, so right now the CLAMM will be up to 24, like the max maturity will be 24 hours, but we can imagine in the near future going to 1 week and to 1 month. Personally, I prefer those longer, as an option trader, I prefer those longer maturities, but we will get there. We'll just launch for 24 hours. And I think the market will be there, but we will gradually move into those longer maturities, especially with the METAMASK that will come on later. And what markets? The 3 first markets will be ETH/USDC, ARB/USDC, and BTC/USDC. But since we're built on top of UniV3, we can deploy a market really fast on any asset. So we can imagine integrating more assets in the future, but really for the STIP, we want to focus on the most liquid market and really get the people interest and then scale. We have been in talks with some protocol to have their tokens potentially in the CLAMM. I cannot say more right now, but that's also an option. And like I said, we can easily expand to any token that is an UniV3 on any chain. So there is no limitation, etc.
I think that's what I'm most excited about of all the detail you've shared. It kind of reminds me, Nomadic kind of reminds me of infinity pools, building perps on UniV3 liquidity. So now we can imagine that Dopex V2 will not only support these major blue chip tokens, which I would focus all of those ARB incentives and, you know, all of the attention of the protocol on those major assets. But it's very exciting to imagine that there could be like a more permissionless path to listing options markets for long tail assets, which mirrors, I think, the joys of using, you know, Uniswap V1, V2, and V3, that ability to, you know, to start a liquidity pool for any token you want. You just have to be brave enough to put the liquidity in there yourself. So am I capturing like the essence of that though? Like, am I right to say, like, is that the future for Dopex? Like, this could really open up the floodgates to offering more exotic options than what we would have seen previously?
Yeah, I think like if you want to build complex structured product, you need to begin simple. You need to have a solid base. So CLAMM is one of those bases. Option AMM is the other base. And then you can iterate, have structured vault products on top, integrate different elements, etc. And so if your components are versatile enough and complete enough and robust enough, you can build anything. Like all the financial products we're seeing in the TradFi, they started really simple, and then they got more and more complicated. They use it, some aspects of every product, etc., and they really built up into being like tailored products, structured products, etc. And I think we can potentially enable people to build on top of us and to add even their own their own magic to it, and to iterate more, and we will help them grow, we'll provide them support, and we will if they need some features, we are ready to develop for them. I think this is what exciting about the current DeFi space is there is a lot of things that can be done and will be done, and if we build a solid product with solid basis, we will be able to be a part of it and to help make the DeFi go further and the derivative space.
Yeah, totally agree. And just to call out, I think your approach to the ARB incentive grant is like spot on. Like launching a new product into those grants is just, I think, a really smart approach and kind of like the best way to use that free gift from Arbitrum. So couldn't be better timing, really. Let's get into the option AMM and maybe like how that works, obviously, and how that plays off the CLAMM as well.
All right, so the option AMM is targeted around the capital efficiency I was mentioning earlier. And there is one aspect in the CLAMM that I didn't talk about until now because I wanted to talk about with it in the option AMM is the capital efficiency. So With the option AMM, people will be able not only to buy options, but only to sell options. For if you want to sell an option in CLAMM, you just deposit and you don't know when your option is going to get bought. So you don't control those parameters. You just provide liquidity passively. In the option AMM, it's designed for active traders. So I want to sell an option right now at this price, at this volatility, and I want to do it right now. So they want to control their payout. They want to do more complex option strategies that involve buying and selling options at the same time. So those have they want to arb volatility. They want to get directional buy depth with a certain risk, etc. So they want to be able to sell options without having to deposit in EB3. So they want just to have a margin, like portfolio margin, like it's on Deribit, like it's on Bybit, like some Binance. When you do perps, you have a margin. You want to take when you open a certain perp position, a certain percent of your margin will be used. This is like that. They would have a portfolio margin. They sell an option. We would calculate what capital requirement they have, and they will have to have it in their margin portfolio. If it goes below the required collateral, their option will be liquidated, and someone else will take their obligation instead of them. They would have liquidity fees, etc., liquidity penalties, but we can get into that later. So they'll be able to sell options and to buy options to construct complex strategies, and they will be able to hedge their delta. For example, if they want, similar to what is done in Bybit on Deribit, they want to hedge their delta with a perp, they will be able to do it and to reduce their margin requirements by doing that. Because when you buy and sell options, you have certain risk that is in terms of the Greeks, in terms of delta, gamma, vega, etc. So you have a certain, let's keep it simple, you have a certain risk exposure. And if you buy or sell ETH or with perps, if you short or long, you can reduce that risk overall. And if you reduce your overall risk, you need less margin because you have less risk. If you increase your risk, you will need more margin because you have more risk. So the option AMM will be tailored for those more advanced traders that will want to deploy a lot of strategies, complex strategies, and more sophisticated than the CLAMM. It will be built on top of CLAMM. Some of the liquidity will be used from CLAMM, but the selling part and the portfolio margin part will be on top, will be different from CLAMM, and we'll be handling it. And I think the option AMM is really nice because for an exchange, for an option exchange, you want to attack volume. So you want to check those that will buy and sell and match them together. So if there is someone that comes and that buys the 200 call and sells the 3,000 calls, and there is someone else who comes who does the reverse, sell the 2,000 call and buy the 3,000 call, our net risk exposure as an exchange or as Dopex will be zero, but we'll be getting fees from both people. So we'll have, this is a way also to onboard market makers that want to provide, that want to buy options, that want to sell options. It enhances the liquidity of CLAMM, it has the liquidity of Dopex. It will be relying a bit on CLAMM, but relying also on those or those market makers, on those option traders, different traders, etc. They provide liquidity from option AMM, and that will potentially help and support to bring more liquidity at a different level, potentially at a longer maturities that are not really adequate for CLAMM. And we would be also something I wanted to mention with the capital efficiency for CLAMM depositor. Later on, I think when the option AMM comes, we will enable borrowing against your deposit for more capital efficiency and for yield optimization. So you deposit your EV3 into CLAMM, you can potentially borrow against it, and your asset you deposit, let's say if you deposit ETH, USDC, and LP, it's synthetic to borrowing against ETH. Because if the price go down, it will be all converted to ETH, and it's as safe as borrowing against ETH. And we will open that capital efficiency also on CLAMM.
That last part is really interesting. I know that it doesn't sound like that'll be something that's launching right away, but this idea to borrow against your kind of passive CLAMM deposits just opens up a whole nother kind of side here. So I think kind of to reiterate, you're basically introducing products for all users. The CLAMM sounds like something for more passive users that just want to deposit liquidity and earn better yield than Uni V3. And then the option AMM is for more sophisticated users that want to execute, kind of more sophisticated strategies, maybe market makers. But both products are somewhat synergistic to each other, which I think is really cool. So with all that, Boss, I'm actually curious, is there anybody else in the space that's doing something similar to this in options? Like, do you see any competitors that are converging on like the same strategy, or is this somewhat uncharted territory that you're blazing a new trail here with V2?
Right. So I see a lot of people are using Uni V3 based strategies. For example, Smiley Finance that will be selling a permanent loss. I think what's differentiating for us is where we are using the tick level. That's the difference. Because what I said about the payoff of an Uni V3 LP being like an option, it works at the tick level, but it also works on a range level. If you have like a range, 1.8K, 2K, and you put it, you're also selling a call and a put on that full range. But here we're using at the tick level. I think that's the difference between us and other protocols. But for the option AMM part, I've been seeing a lot of people building portfolio margin right now because they know they need the capital efficiency. I think, like I said before, I think one of the major pitfalls of all the option protocol was the capital efficiency, whether it was with providing liquidity or it was with people not being able to sell options easily. I think those two aspects, I see a lot of people in the space. I think the aspect of the tick usage, I think that's really unique to Dopex. From what I've seen, maybe there is someone that is building on it. I don't know, but from I see from Smiley, from Gamma Swap, from a few others, they're not using. Some of them are using NVC, some of them are not using at all. They're using the vault system, and I think the vault system is really problematic because you are forced to manage the risk, and market making is a really hard job, and we are not necessarily equipped for it. You need a lot of financial knowledge and financial tools to even do it right. And some of the market makers in the TradFi business, they don't necessarily make money from their market making. They make money because they get rebates from exchange for their other operations. So you'll find those big hedge funds that will do market makers because they will get less fees on their hedge fund business. So it's like, even if they lose a bit on market making or they don't make enough to be profitable and to be to justify the user's capital, they will make so much in fees, rebates and in fees adjustment from the traditional, from the other businesses, it's worth it.
Boss, let's get into the last piece from this recent Medium post about rDPX V2. Can you break down what's changing for rDPX holders? I happen to be one, so I'm very keen to learn more myself.
rDPX, which stands for Rebate DPX, was first launched as a rebate token. So it would be used in the Dopex ecosystem and it will support option writer loss. So if you write options and you lose, we will compensate you a bit with the rDPX, and that will essentially improve your overall return and make the liquidity sticky and enable you to take the risk, etc. So here with come back to that, how it will be used. So people will be able to bond rDPX and ETH. So they will be bonded. They will use 25% of rDPX, 75% of ETH, and they will bond it, and they will get a receipt token of that. This receipt token will be able to get yield from. It will be staked, and will be able to get a yield from different sources. Notably, we'll be incentivizing the curve pool to get yield. We will have other revenues. But the idea is then to use it to compensate also option sellers. Option sellers, give them the ability to get some rDPX for free if they have huge losses, and force them to bond it as a compensation for their loss. So we'll not give them rDPX they can sell, we'll give them rDPX that they can bond, get that to the SIP token, and then do whatever they want with it, sell it or whatever, and be compensated for the loss, getting the yield. So it will be used to, from one part for rDPX holders that want to get yield, and it will be a great yield for the next 3 months. I'm talking with the STIP, I'm talking it should be at least around 12, minimum I think 12% return on ETH, if not higher. It will have other sources of revenue and incentives except the STIP. Arbit will have CDX potentially pointed to it. It will have revenues from the selling tax we will introduce on rDPX. It will have a percentage of the potential of the redemption, because when you bond your rDPX and your ETH, you can also redeem it. Like you bond rDPX and ETH, you get a receipt token, you can redeem that receipt token and get rDPX and ETH back for a fee. And they will get some of that fee potentially. So there is a lot of ways to reward those receipt tokens. And we want to create an whole ecosystem around DPX V2, and where rDPX will be its own ecosystem, but it will help also the DPX V2 ecosystem.
So the DPX token that we know of today will be changing to a vote escrow V token style. And I believe that token will capture a lot of these fees that you were just running through. Is that somewhat correct?
Yeah, so like those fees, like I will get back to rDPX in a minute, but like receipt token holders will get some of the fees generated from the whole ecosystem, like the tax, some of the tax potentially, like all those are to be determined, but we will get some of the tax, some of the redemption fee, they will get the reward from CDX being pointed at them, etc. And at the same time, rDPX holders will also get some yield from that, some revenue from the ecosystem. They will get, just to clarify one point, rDPX has been out for more than a year, and you can lock it up to 4 years. So right now it already exists, the rDPX. It gets some of the revenue from the protocol, and it gets incentive in terms of DPX. And our goal is with this V2 to generate revenue to potentially eliminate all DPX inflation, and to give real yield without additional incentive. And this real yield will come from different sources. They will come from the fees from CLAMM. It will come from some of the sales tax of rDPX. It will come in terms of decayable rDPX, decayable bonding rDPX. What does this mean, decayable bonding rDPX? It means we will give to rDPX some rDPX they can only bond during 2 weeks. So we will give them today, they will have 2 weeks to bond it, or it dies. So it's a way to give them some of the revenue and some yield from rDPX growing and from the rDPX being bonded in the system. So and I think that's the 3 major revenue sources that will be out after DPX V2 and rDPX V2 for rDPX holders.
Got it. I'm such an rDPX maxi that I didn't even know VDPX was out. So thanks for that clarification.
And I think like people had been a lot like yourself had been a lot like focused on the rDPX V2, but I think the DPX V2 is the sleeper good opportunity for now, and later on it's a coin that will perform very, very well with all what we are building, with different revenue streams, with this revenue from CLAMM, with some of the revenue from rDPX, etc. And it's like really different. So if you were looking just to improve your ETH yield, you can go into rDPX, bond it, and you will get that superior yield that should be at least double of what you will get in Lido for yield. And you will. It's a very secure system. We will have in place because it's based like it's backed 25% per with rDPX, but we will have puts in place, perpetual puts in place, to make sure we can't lose more than 6% of that of the value of ETH, like more than 25% on the rDPX. We will quickly accumulate revenue in the rDPX V2 treasury to go above backing. And when we go above backing, we will be able like to never go back below backing, and will always be over backing for that receipt token ETH, and etc. etc. And then we will be using some of that revenue to potentially get more incentives for the receipt tokens to grow the amount of rDPX that is bonded, and to limit the supply of rDPX, to make rDPX worth more. So we'll be able to use it, to use less of rDPX to like as rebate for option writers, and that will enable us to have more liquidity on DPX, and that will enable us to have more fees on DPX, and etc. So those both systems are really connected, and so if you are like more, those both systems are really connected, but are different at the same time. They can live on their own, but they can help each other. So if you're looking for a safe yield, DPX is the way to go. If you're looking for to optimize your yield with CLAMM, to take a little bit more risk, if you're looking to use options, so DPX V2 is your way to go. But I think getting exposure to both systems is really good and is advisable in my opinion, because both are different and serve different like risk levels, but both are good and both should really perform well in the next month.
Boss, this is a great place for us to start to wrap up. So I want to remind our listeners to, first, they can learn more about Dopex and Dopex V2 by going to dopex.io, or you can check out the app at app.dopex.io. We'll also link the recent Medium post about Dopex V2, so you can look for that in the show notes. They can follow Dopex on Twitter or X at Dopex_IO. They can follow Boss on Twitter at Bosslmp75. And then a great place to really start to ask questions or learn about Dopex and Dopex V2 is just get into the Discord, and the link there is discord.gg/Dopex. We'll also throw that into the show notes. So, Boss, thank you for taking the time to walk us through so much detail here in Dopex V2. I know we're both really excited as users to have that deeper liquidity for on-chain options. Anything else you'd like to share, though, in terms of product shipping for the next 6 to 12 months?
Yeah, to give you a quick heads up, the CLAMM and the DPX should come in the next 10, 20 days. We'll be having the option AMM hopefully in Q1 2024. From that on, we will focus on developing the ecosystem of DPX, so getting potentially more liquidity in, getting more partners for the V3 LPs, getting more protocols to build on top of us, and we will try, like I said, to have those features that some projects may need. We don't have a roadmap after half of 2024, but we are currently bouncing ideas on what should we do next, and and how it will synergize with the whole Dopex ecosystem. But what I can tell you is we are having some great ideas. Nothing is decided yet, but we will have more tokens, we will have more presence potentially on different blockchains, and we will aim to provide people with more products. Where is it structured products? Where is it different ways to use options, more markets? That's not determined yet, but we have been shipping a lot of products in 2023, and we plan to continue the same in 2024, if not more. And hopefully with the market in better condition, we'll be able to do that and to get more partners and to help the overall ecosystem.
Boss, good luck with the launch. And like I said, we're just excited as users of Dopex. So hopefully we can have you back in the future and get your feedback on how the product is gaining traction and any other sort of future products from Dopex.
Thank you for having me. It was really a pleasure. I'm looking forward to the next time.
Thanks everyone for tuning in. If you're a talented founder or developer, please consider reaching out to our team at fourthrevolution.capital. And for future episodes of the Edge podcast, please check out our link tree at edge_pod.